Hi, this is class 12 if you're on the Monday, Wednesday, Friday class schedule, and it's class 9A if you're on the Tuesday, Thursday schedule. So now we're moving on to chapter 4. And chapter 4 is about completing the accounting cycle. That's right, it's a cycle, which means we're going to start over again next month or next year or next period, whatever that is, next period. So it's a cycle, so we do the same thing over and over, right? We have transactions occur, we analyze, we journalize, we post to the ledger, we prepare an unadjusted trial balance, we adjust the trial balance using adjusting entries, then we have an adjusted trial balance, then we prepare the financial statements, and the last part is closing the accounts. So we're up to finishing the accounting cycle, which is prepare the accounting financial statements and close the accounts. So first of all, let's review preparing the financial statements. We've already learned them, we know what they are, we know a little bit about how to prepare them. We're just going to go into a little more detail now. Y'all did pretty well on the exam, and I'll stress a few points that seem to be common issues for preparing financial statements for students when they're first learning them. All right, so how do we prepare financial statements? After the adjusted trial balance is prepared, it's time to prepare the financial statements. The financial statements are prepared in the following order, and this is important. We prepare them in order for a reason, as you'll see. Income statement, statement of retained earnings, and then the balance sheet. The income statement reports revenues and expenses and calculates net income or net loss for the time period. The statement of retained earnings shows how retained earnings changed during the period due to net income or net loss and dividends. The balance sheet reports assets, liabilities, and stockholders' equity as of the last day of the period. So we've got our three statements. They're always prepared in this order: income statement, statement of retained earnings, balance sheet. And you have a pretty good idea. A few of you, when we did the exam, were wanting to put expenses as liabilities. I see this a lot. I can see how the category is working. It's like, oh, I owe somebody something. But an expense is actually something that's been taken care of. A liability is something you still owe. So expenses go on the income statement. Retained earnings is where we take those net incomes from the income statement and the dividends that we may have paid out, and we calculate our new retained earnings, which then goes on the balance sheet. Balance sheet is always assets, liabilities, and equity accounts. Retained earnings is an equity account, and it is the only account that's on two statements. Retained earnings goes on the statement of retained earnings, obviously, duh, and it also goes in the equity section of the balance sheet. So it should be pretty easy to split up. If you see something that's a revenue, it goes on the income statement. So it's an expense, goes on the income statement. Retained earnings, dividends, go on the retained earnings statement, and the income moves over there. And the balance sheet, assets, liabilities, and equity accounts. All right. So the financial statements are prepared from the adjusted trial balance. You may recall that in Chapter 2, as we learned how to do transactions, we analyzed them and figured out what's the debit, what's the credit, what accounts affected. So then we journalized them, journals in chronological order. Then we posted to the ledger. We symbolized that using T accounts. We posted to each account so we could get account balances. Then we took those balances from the ledger and made a trial balance, right? We're going to try to balance, a trial balance. And we put the debits in the debit column, the credits in the credit column. Looked at the bottom for the total. Do debits equal credits? Great. Then, Chapter 3, we learned, okay, now that we've made sure everything's good on all the transactions we've done all month, let's think about anything else that needs to go on there and adjust. So we did adjusting entries. After we did adjusting entries, we had to see if we still balance. So we did an adjusted trial balance. And this is an example of the adjusted trial balance. And it's just, again, that listing of all the accounts we have and their balances. The debit normal balances are on the debit side. The credit normal balances are on the credit side. And this is where we get the numbers to prepare our financial statement. So if you were given an adjusted trial balance and said prepare the income statement, you would pick the numbers off of there. And then same thing, you would use those numbers to prepare your statement of retained earnings. And then you'd use the numbers to do your balance sheet. All right. So the financial statements will be prepared from the adjusted trial balance. Each account on the adjusted trial balance will be used on only one financial statement except retained earnings. I see that I've put this in kind of bold, big letters. So this is the main thing students do, is they'll put especially some assets on the income statement. Like they'll put cash. Students want to put cash on the income statement because it's like, oh, we got income, we got cash. Well, cash is an asset. It's also what you're going to have to do is pick out the revenues and expenses only and put them on the income statement. Retained earnings is the only one that appears on two statements. It appears on the statement of retained earnings and the balance sheet. So very simply put, when you get your trial balance put together, you're going to move the first income statement. So you take the revenues, move them to the income, you write them on your income statement, right? You're preparing a report. The income statement is a report. Here's our net income. You move the revenues to the income statement. You put the expenses on the income statement. You add all your revenues, subtract all your expenses from your revenues, and that's your net income, hopefully, unless you had more expenses than you had a net loss. Right? And so now you're never going to use any expenses again. They don't go on retained earnings. They don't go on balance sheet. You're done with them. But the next statement you prepare, retained earnings, that you take your beginning retained earnings balance, that net income you calculated on the income statement, move it over. Dividends, you find dividends, put them on, and then you come up with your ending retained earnings. Now you go and prepare the balance sheet. So the balance sheet, you're going to grab your assets, liabilities, and equity, except for you don't grab retained earnings from here. You grab the retained earnings you just calculated. And that's it. That's why retained earnings appears two places. It's got to go on the old retained earnings has to go on the statement of retained earnings. Then your new retained earnings goes on your balance sheet. So only one financial statement for all the accounts except retained earnings. That's huge. All right. There are some relationships amongst the statements, and that's why we prepare them in a particular order. We have to take the information from one statement and use it to prepare our next report. All right. So first thing we always prepare is the income statement. So here's how you do that. You take your expenses, you take your revenues, you take your expenses, and you prepare them. You get your net income. Well, the relationship between the financial statements is that net income from the income statement increases retained earnings. A net loss decreases retained earnings. All right? Ending retained earnings goes to the balance sheet and makes total liabilities plus stockholders' equity equal total assets, satisfying the equation. So we prepare them in this order so we can get the new information, and we update our balance sheet with the new retained earnings, and we keep our accounting equation in balance. So let's look at the income statement. We always prepare the income statement first. The net income or net loss from the income statement will flow to the statement of retained earnings. So we go to our adjusted trial balance to get these numbers, right? Your adjusted trial balance has all your revenues and expenses. So you prepare your income statement like this, and it does have to be in this form, and it is important. These are reports required by GAAP, and it's not a math problem where you're working out net income and you just, here's the right number. It's about reporting it in a format that users can use. So it goes in this order. You have to have a title that says what company this is. What statement is this? It's the income statement. For what period? Is it a month? Is it a year? And when did it end? Then your revenues go first, because we want to see those first, right? The money coming in, we want to see that. And then the expenses come next. We want to see them in order of magnitude. In other words, the biggest expense comes first, second expense next, and so we put those in that particular order, and it matters. Then we calculate net income, right? This is not an account that's on the trial balance. It's not an account anywhere. It's calculated for this report. So revenues minus expenses equals net income. And so it's important to have that at the bottom, net income, because that's what people are looking for. And we're done. Now that we've calculated net income, we're ready to go on and calculate our ending retained earnings. All right. So we move that net income over to that retained earnings. The second financial statement prepared is the statement of retained earnings. The net income or net loss from the income statement increases or decreases retained earnings. So obviously a net income increases retained earnings, and net loss decreases retained earnings. The ending retained earnings balance flows to the balance sheet. So remember, we calculated our net income. We got this beginning retained earnings from the trial balance. So on the adjusted trial balance has a line, retained earnings. That's your beginning. Even though it's an adjusted trial balance, there's nothing to adjust yet. We haven't done anything, so whatever we started with is just still the same balance. So we take that balance, put it at the top, add net income, subtract net loss, subtract any dividends we've paid out, because that's no longer retained, right? Dividends are out by definition, paid out, so they're not retained. So we paid that out, so subtract dividend. And then you come up with your ending retained earnings, right? So in other words, we've changed our retained earnings by what we've taken in and what we've paid out, right? So we've fixed that. That's how we account for those revenues and expenses affecting affecting equity through this, right? So then we take that new retained earnings and move it to the balance sheet, which is what we prepare next. So for the balance sheet, when you go to prepare it, super important that you put assets on the left, liabilities and owner's equity on the right. Unless you're doing what we call statement form, then they all go in a vertical row. They never go in a vertical column. They never go in a row across. You never put equity before liabilities. You never lump all the liabilities and equity in one side because you know you're going to add them anyway. No, people need to know, what are my assets? What are my liabilities? What are my equities? And I want to see them separate in their proper categories. So you have to have this set up right. Assets go in the order of most liquid to least liquid. Liabilities, most current to least current. And equities, common stock, then retained earnings. That's all we really know for now. So, how do we do this? Well, you prepare it from the trial balance. So you go over to your adjusted trial balance and you get all your asset balances, your liability balances, and you get your common stock balance. But this retained earnings, this comes from the retained earnings statement. The trial balance has, if you look, you'll see, right, that this trial balance certainly has retained earnings on it. But I guess it doesn't. This company's brand new. It didn't have any retained earnings, that's right. But most of them will have retained earnings. But a brand new company hasn't retained anything. So in this case, we use our retained earnings. We always use the retained earnings from the retained earnings statement. So once you've calculated retained earnings, you put them here and you do your new balance sheet, and it'll balance, right? As long as everything's always been in balance, your adjusted trial balance was in balance, all these statements will be fine and your balance sheet will balance as long as you're calculating your net income correctly, your retained earnings correctly, and you carry it over, it's going to balance. All right, so that's what's important, is calculating your net income first, moving it to the statement of retained earnings, then taking that retained earnings, moving it to the balance sheet, and doing the balance sheet. So go ahead and practice doing that. You've got some homeworks preparing financial statements, and we'll do some more in class. If you are in the Tuesday-Thursday class, you have one more video to watch. Monday, Wednesday, Friday people, this is the only video for your class today. Good luck with everything.